Hey guys, good afternoon. So I'm just going to quickly now run over all the setups that took place last week. So starting with Monday, which is Monday the 23rd, Monday the 6th of March. Okay. Now, of course, going into the day, we already had clear buy side and sell side. So I'm not going to focus so much on the higher time frame levels. I will be paying a lot more attention to our lower time frame levels as well as the lower time frame confirmation. So first is first, just going to just use bar replay just to go back to Monday. So this is just the pre-London Open levels for the 4 hour. So it's the H1 buy side target, which is the swing high. And then of course we have for the sell side, the imbalance right here. So this is the H4 sell side target. All right, now going down to the 1 hour time frame. So again, just going to just forward play it again one more time, just to just before the European Open. We have again very clear levels with the buy side target on the 1 hour being this little imbalance that remained open right here. So I'm just going to label that H1 buy side target. And then of course the sell side target will be the same level as the 4 hour. So just going to make this also the 4 hour slash 1 hour H1 sell side target. Right, so that's that. Now, if we go down to the lower time frame, so what we're now interested in, so I'm just going to just move these lines because I do like to use them. So EU Open at 2 and London Open at 3. So EU Open for analysis, London Open for trading. So going on to the 15 minutes time frame, if I just move the end of day line to 7 p.m., no, 7 a.m., usually 6 a.m., but just put it on 7 a.m. for now. So the first thing to pay attention to is, okay, so just before the London Open, where is price sitting? Well, price is still sitting within the Asian range, but it has taken out H1 buy side. But before any trades can be taken, we need to first wait for price to either break outside of the Asian range or to purge it. Now, if we take a look at this scenario, we can see that price obviously rejected the H1 buy side target, right? Traded outside of the Asian range, but immediately pulled back into the Asian range. So this is a trap, okay? So again, we take a look again, we're just waiting for that clear break. So again, we have this candle that has traded outside of the range. However, we want to see what the next candle does. We can see that again, railway tracks back into the range. So for me, so although price has gone from H1 buy side to H4 and H1 sell side, price is still trapping around the Asian range. So at the moment, at this very moment in time, there isn't really any clear opportunity to engage in a setup. However, what we can now see, so again, we've seen prices again, yet again, closed outside of the Asian range. Now I just want to see what the next candle does. There we go. So we have a very strong shift candle that happened on Monday. So this is about an hour, so it's 5:30 in AM New York time, right? And of course, London opens at 3 a.m. New York time. So we're looking at around 1 hour and 2 hours and 30 minutes from London Open that we can see prices finally shifted outside of the range. Now, looking at this, this is obviously a break scenario, right? And what we can anticipate in this kind of situation, or what I was anticipating on Monday was, okay, price is broken out of the range. I can see a clear area of order accumulation, right? So an area of order accumulation is also known as an order block, right? So I can see a clear area of order accumulation, which is my bearish order block. So just going to label this bearish order block. All right. However, what isn't evident is a clear area to engage, right? That's what isn't evident. So we can see that, okay, price, I do apologize. What is evident is a clear area to engage, which is the 4-hour bearish order block. So at this point, the only thing we can do now, or what I would do in this situation, is to wait for price to trade into the 4-hour order block before I engage with price. Okay. So I was pretty much waiting up until the end of session, right? But price did not engage, did not trade back into the 4-hour bearish order block. So it was a 15 minutes bearish order block. So therefore, there is no setup. So on Monday, there wasn't any opportunity to engage in this. Now, I know some people would have seen this as a break, retest, and rally, and that's okay. But for me personally, just based on the rules around ranges and what defines a trap, what defines a break, and what defines a purge, because these are very clear definitions, this does not classify as a break on break continuation from this side. So this is where the break happened. If we were going to have a setup, it would have traded into the order block, or we would have been looking from a long into the order block and a short from the order block to the recent low. So Monday, there wasn't any opportunity to sell from the bearish order block as a break retest continuation scenario. Okay. So now going into Tuesday, so what I'm going to do now, I'm just going to update the levels for Tuesday. So session open going into Tuesday right there. All right, so buy side for the daily still remains the same, sell side for the daily still remains the same. We can see 2 sessions of drop, a session of price rallying right there. So the general daily bias on this is still bearish, right? So I'm still anticipating continuation to the downside. So going on to the 4-hour time frame. So again, just going to update my 4-hour levels. You can see right there, prices feel the imbalance, but I'm just going to forward play to just before the 1 a.m. candle opens. And I'm just going to update my levels from there. Let's take a look. So the 4-hour buy side target will be the swing high right there. We can see the price left a set of relative equal highs. And then the 4-hour sell side target would be the swing low down here. Right. So once we've now defined these key levels, the next is to go down to the 1-hour time frame. So EU Open is at 2 and London Open is at 3. Right. So just going to forward play it one more time, and I can now just update my 1-hour levels. So just taking a look at this, I can see that the next draw on sell side on the 1-hour is the swing low down here. And the next draw on buy side on the 1-hour is, I can see it's a bit of an imbalance right there. I think on this day, I did identify this imbalance as the next draw on buy side for the 1-hour. So I'm just going to label this as such. Sorry, just a second. There we go. So now just going to update that H1 buy side target. And the visibility should be just from the H1 onwards. Okay, so now we have our defined levels. What we now need to do is to update. Obviously, where I can see my markings from the day are still there. That's okay. So now the question is, okay, what are we now looking for? I'm just going to remove some of these things because I want to show you exactly as I was seeing this in real time. So price obviously was still within the range until when the European Open, we did see price. So I'm just going to rewind that again because I want to take a screenshot of this to apologize. All right, so we can see the price is still within the range, okay? Now, European Open, what does price do? Price breaks outside of the range. Beautiful. So in this scenario, just before the London Open, the question is, what can we anticipate? Well, very simple. We can see that before the break, price created a bullish order block. So all I'm interested in now is to, number one, to identify my bullish order block, right? Once I've identified the bullish order block, what you need to be aware of is confluence such as, well, look at this. We have an H1 buy side target sitting at pretty much where the bullish order block is. So in this scenario, what is the next reasonable thing that we can anticipate? Well, very simple. I'm anticipating a retest of the 1-hour bullish order block. and a potential continuation. Alternatively, what could also happen, because if you remember, the daily bias is still bearish, right? So I always refer back to my daily 4-hour, 1-hour bias, because that gives me direction. I could also have a break retest of some sort of a bearish order block if there was a 5 minutes break of structure, and then a potential continuation to the downside. So let's take a look and see what happens. So London Open, price broke, not only traded through the H1 buy side target, it also broke below the low of the Asian range and traded through the H1 sell side target. Now that's fantastic, because there are 3 kinds of setup you can have in this scenario. So obviously the first one, like I mentioned, is usually the 5 minutes one, where in this case, let's imagine a price broke structure on the 5 minutes, which it did right there. So this is a secondary break of market structure with an imbalance. What I was anticipating just before the London Open was for price to trade. So price had already traded into the imbalance right there, this candle. If you notice, this candle tapped the imbalance and pulled away. But I was anticipating a retest. So my rules means that I have to wait until the London Open to trade. So I can't just execute just because of the sake of it, right? So confirmation happened at 6:50 a.m. of a 5 minutes break of market structure. At 6:55 a.m., price had retested the imbalance. Now, going into 3 a.m. or the 8 a.m. London Open. So this is 7:50, 7:55. And going into the 8 a.m. London Open, I'm anticipating price to trade back into the bearish imbalance. But that doesn't happen. Rather, what does price do? Price proceeds to break below the 15-minute Asian range. Now, this presents a second opportunity for me to engage. And that opportunity presents itself on the 15 minutes time frame. Now, these kind of situations are very rare, but they do happen. How does it work? Well, notice that price breaking below this order block is also a 15 minutes break of market structure. So this is a classical 15 minutes break of market structure right there. So in this case, what is the next thing to anticipate? Well, I'm now anticipating a retest of the 15 minutes breakout, because price broke through the swing low and closed below it in a very strong shift candle. So therefore, my anticipation is a breaker retest and a bearish continuation. So I'm going to be looking to go short at the breaker. However, rather than just simply placing a pending order at the breaker and stop above that, because the risk reward for this would be incredibly skewed against me, as obviously the next reasonable target in this scenario would be the recent low, the intermediate lows down here, as well as the H4 sell side target. What I will be doing is simply waiting for price to trade back into the breaker, which it did, right? So if I go to the 1 minute time frame, and now from the breaker, I'm now interested in a 1 minute opportunity, okay? So how does this work? So price traded right into the breaker. This is the swing low responsible for the highest high. And from that point, price traded below that swing low responsible for the highest high, making this a classical break of market structure. Now, classical break of market structure, price does not close below the swing low. So therefore, my interest of entry is going to be the last up close candle. So that's what I did. So just before, so as soon as I saw this break of market structure, I set a short order right there. My stop loss was positioned 5 pips above the recent high. Right there. Okay. So rather than going above the 15-minute high, I waited for a new high to be created, took a break of market structure within the high volume area, right? And then there were 2 different areas I was interested in trading to. The first opportunity was to trade to the recent low. Why? Because again, from the recent low, there's no guarantee that price is going to keep on rallying to the downside. However, at the moment in time, I was like, okay, price could trade to the recent low, but this is a very bearish bias. So what I did is actually I looked for intermediate lows, because price had already taken out a recent low that I was interested in, I looked for an intermediate low, which was the swing low down here, right? And I identified this in the group chat earlier this week. Right, and this was to ensure that I could at least get a 1 to 2 for my trade without um, obviously being unrealistic, right? Because again, the general bias was bearish on the daily, okay? We are still within that second expansion to the downside. Bias was also bearish on the 4-hour. So for me, there was a lot of indications pointing towards a short. So therefore, a short to the H4 sell side target, considering price has already taken out the H4 buy side target, was very realistic. But of course, at the same time, I didn't just want to keep my fingers crossed that price would trade to the H4 sell side target. I wanted to make sure that at least I could take a one-to-one and cover my risk, before price gets to the H4 sell side target. So the opportunity to the first target, which was the intermediate low on the 1-hour time frame, was a 122.59, and to the second target, which is the H4 sell side target, was a 123. Okay. So that was the position. And of course, for both orders, stop went 5 pips above the high as a standard rule. So now let's take a look and see what happens. So we did see that strong shift that ensued afterwards, and price eventually, although it did take its time, it hit the first target at the intermediate low. It pulled back, and then just going into the New York Open, just before the New York Open, price took out the second target. So that was the setup for Tuesday. Okay, now I know that price did run a little bit furthermore. That's fine. Okay, remember the goal of trading is to every day look for something simple that you can see, engage, take your money, get out, repeat the next day. Okay. All right. Let's now take a look at Wednesday. I do apologize for the background sound. All right. So going into Wednesday, the 8th of March, I'm just going to now update my levels for this. So we saw that incredibly bearish session on Tuesday, giving us that 1, 2, 3 sessions of drop. So therefore, going into Wednesday, we can anticipate some sort of a reversal, especially as prices also traded into a high volume area, namely the monthly imbalance, right? So the next draw on sell side liquidity is the swing low residing at where the monthly imbalance is. And the next draw on buy side liquidity was the daily swing high. Another thing that I noted on this day as well was the fact that price had already traded and broken below the weekly sell side target. So this is something to be cautious of, as this now new area of resistance that has now been broken could act as an area of support in the future reversal. So going into the 4-hour time frame, so just going to advance into just before the open of the session on Wednesday. Now, what I'm looking for here is the next draw on buy side liquidity, right? So the next draw on buy side liquidity is the imbalance right here. All right, so I'm just going to label this H4BST. And the next draw on sell side liquidity is going to be the same low that the daily low is on. So just going to update this as daily slash H4 sell side target. Right, so just taking a look at this, we can see that we've seen that 3, 1, 2, and 3 expansions to the downside. So we know that some sort of a bullish reversal is imminent. So if we go to the 1-hour time frame, what can we see? Simple. So just going to, again, just push this forward one more. Right now, just just before the 2 a.m. just going to move my lines back to where the initial levels were. So this is next year on buy side, and this is next year on sell side. And then if I just take this EU line to 2 a.m. and the London line to the 3 a.m. Okay, so if I go to the 15 minutes now, right, you can see the clearly defined Asian range is still intact. So Asian range is obviously from this high to this low, right? Because price had already given us an initial high, taken out the high, came down, taken out the low. So there's very clear accumulation within this area, okay? So this is the pre-EU open range. Okay, so I'm just going to delete this. Right, so after the pre-EU open, what we're now looking for is some sort of a move outside of the range just before or just after the London Open. So just going to forward play. Just before the London Open, we can see the price is still within the range. So at this point, what can we do? All we simply need to do is wait for price to trade outside of the range before we can engage. So let's see what happens. So we can see that price is taking out the H1 buy side target. We cannot really call this a break or a purge yet because it's a single candle. So we want to see what the next candle does. And we can see the next candle trades into the range but closes outside of it. So at this point, what I'm pretty certain I have is some sort of a break, but I want to see what the next candle does, because remember, we can still have evening star, morning star formations. And look at that. So we can see that price, although it takes out the high of the range, it forms an evening star back into the range. So therefore, price is trapping around the range. And remember, when price is trapping, we want to stay clear. We want to wait for a clear sign of a break. So again, now we see the next candle closes outside of the range, but immediately closes back inside of the range. So again, all of this is still trapping, right? It's a RoboTrack trap. So again, still waiting for a clear sign that price is ready to move. So we see again, price is traded outside of the range. So again, I want to see what the next candle does. I can see the next candle fails to close back into the range. So for me, this is now a sign that we could be looking at a potential break scenario. However, if I am going to get a break scenario in this, what am I going to be interested in? Well, where is the order block responsible for price breaking outside? Well, the order block is going to be within all of this mess. So for me, in a scenario like this, right, I wouldn't take a break retest. Why? Because this is price trapping around the range. So what I want to see is, will price trade away from the range? Remember, we're anticipating a bearish reversal, a bullish reversal. So if it does, then I'm going to be interested in a BRC scenario. If it doesn't, then what we could see is price break, retest, and then we could then anticipate some sort of a reversal. So what we can see now is that price obviously is now giving us this move, retested, and is now giving us that rally, which is fantastic. Price is now taking out H1 buy side target, as well as the 4-hour buy side target. So at this point, what I'm now interested in is I'm interested in going short, right? So this is now very late into the open of the session, okay? No, so this is very late into the open of, of the London session, right? Going into the New York Open, right? And what I'm seeing is a potential BRR scenario where price could give us that bearish reversal. So the next thing I want to evaluate is, okay, number one, what's my entry opportunity going to be? And number two, where am I going to be looking to take my profit? Well, for me, the most reasonable area that I should be the first profit target would be this 15-minute short-term low. And after the 15-minute short-term low, the next reasonable profit target would be the H1 sell side target. So it's taking a look now at the 1 minute time frame. I'm now looking for an entry confirmation. Okay. So initially, right, we can see the price obviously, again, just to give that clarification, I'm just going to delete this. So we can see the price is now broken away from the range, from the Asian range. Okay. Now, after that break away from the Asian range, what we're anticipating is for price to now retest an order block responsible for the break. So what I usually do is I look for something that's quite deep, right, that price has been respecting. So this level right here that price has been respecting, this is a key area for me because this is now the most recent order block that was created before price actually broke outside of the range. And I can see that price, although it purged the high of the order block, traded back into it, this is when it broke outside of the order block. This is the retest of the order block. Now, initially, what I'll do is I'll look for a potential opportunity to trade at this retest long, with the first target being the recent high. But I can already see straight away that from, if I were like, this is a break of market structure right there. If I were to go long from this break of market structure to the recent high, I'm going to get less than a 1 to 2. So this is not an opportunity worth taking. Usually in these scenarios where the move from the BMS to the recent high is less than 1 to 2, usually there is a reversal opportunity imminent. Okay, not always the case, but sometimes. And in this case, I'm simply going to wait and see if I get a reversal opportunity after price takes out this recent high. Now that price has taken out this recent high, I'm now interested in going short. So if we take a look at this, we can see that this initial high price obviously came up, took out the high, broke below, but we don't yet have a break of market structure. Then price creates an intermediate low down there before breaking below that intermediate low. So this is where price officially breaks market structure on Wednesday. Right? So we now have our break of market structure. Again, I've already identified the profit target levels. The first target is going to be the 15-minute short-term low, and the second potential profit target is going to be the low of the Asian range. The reason being is because we are within a potential bullish reversal phase. So you do not want to be overly ambitious with where you want to go short to, because we are trading against the dominant trend. So what I would then evaluate now is, okay, will I get a 1 to 2? So 5 stop goes 5 pips above the high. And then the first target is the 15-minute short-term low. I can see that I can generate a 1 to 2 R to R to the 15-minute short-term low. That's fantastic. And then, of course, if I were to squeeze in a little bit of extra, I can get a 1 to 3 to the H1 sell side targets. I know at the very minimum, I'm going to get out of this trade with what I'm risking. Okay, so risking 0.25%. I know that I'm at the very minimum, right? I'm going to net 0.25% from this position. So let's take a look and see what happens. So you can see that after the price breaks market structure, right? My area of interest, so there's a secondary break, right, is obviously going to be the imbalance right there. So this is an imbalance. I do apologize, guys. I'm a little bit ahead of myself here. All right, so secondary break below the intermediate low right there. Price leaves an imbalance. I'm just going to adjust my levels to where the optimal entry area is. Right, so optimal entry point is the imbalance, right? Just something to be clear on. It has to be the open of the imbalance, because price could simply tap into the imbalance and run away. What I would sometimes to do is place my order just a few pips below to account for spread. Price trades into the imbalance, triggering an entry, and then proceeds to give us a shift. And then after that, we see that price hits both the first and the second profit target. Now, Wednesday was an incredibly erratic condition, because it was, again, it was a day of reversal, it was a day of accumulation, because we've seen that strong shift happen the previous day. And usually after a strong shift, we can anticipate a period of time for the market to try and correct itself. So it was a very erratic condition, but if you had entered appropriately, if you had positioned your stop loss in the right place, which is 5 pips above the high, you would have been able to weather the volatility, and you would have essentially taken out profit from the market from the 15-minute short-term low and the H1 sell side targets. That's why it's incredibly important. Always position your stop loss 5 pips above the high, because let's imagine that your stop loss was somewhere down here, right? Now, in this scenario where price came incredibly close to our initial area of entry, and your stop loss was what, just a few, one or two pips away from the high, what the brokers would usually do is when they bring price back, or when price does come back up to a recent high or a recent low, because a lot of traders would position a stop loss above recent highs and recent lows, they would widen the spread, right? Now, if you're not watching this in real time, you wouldn't notice it. But if you're watching your charts in real time, what you would notice is that your spread might go from 0.1 pips to 0.3, 0.4. Or if you have wider spread, like 1 pip spread, you would notice it move by 1.2, 1.3, and sometimes 1.5. But the spread, the widening of the spread is more than enough to take you out, even if your stop loss is 1 or 2 pips above the recent high. So this is why I always advise 5 pips above the recent high is a safe distance to position your stop when you enter the market, to ensure that even in scenarios like this, when price does come up to retest that recent high and the brokers does widen the spread, you're on the safe side. So that is the setup for Wednesday. So now just going into Thursday. Right, so again, just updating those key levels. So again, the sell side start target still stays the same. However, notice that with the close of Wednesday candle, price left a massive, massive imbalance. That imbalance is going to be our next draw on buy side liquidity on the daily time frame. Right. So we've seen again 3 sessions of drop, and we've seen that accumulatory session on Wednesday. So at this point, usually scenarios like this, the next day is usually a no-brainer. That's why Thursday was an incredibly easy day to trade, because we've seen that big push to the downside. We've seen that day of price accumulating around the low. So the next day, a bullish reversal or a bullish move at the very minimum above the previous day's high was imminent. Now, again, an area to really aim for would be to aim for that retest of the weekly sell side target. The reason being is because just because price creates an imbalance doesn't mean it will fill the imbalance straight away. If you take a look at this scenario, this situation that happened on the 2nd of February, this is earlier in the month, right? Well, last month. What you notice is that price obviously gave this initial shift to the downside, leaving again an imbalance that is very similar distance as the most recent imbalance that was created. But it took 1, 2, 3, 4, 5, 6, 7 days, right? It took 7 days for price to completely fill the imbalance. So that's literally 2 trading weeks for the price to fill that imbalance before we saw that continuation to the downside. So never ever aim for, so let's imagine you're going long from here, never say, oh, I'm just going to take profit out of the daily buy side, because again, it's not guaranteed that that imbalance will get filled immediately. It might take a few days, a few weeks, or even sometimes a few months for price to fill an imbalance of this distance. So a good area to aim for is always the point of equilibrium. The point of equilibrium is the midpoint between the extreme of where an imbalance has been created, and the confluence of our equilibrium point is the weekly sell side target. Right, going over to the 4-hour time frame. Right, so just going to again forward play this to just before the European Open. Right, so again, the most recent draw on sell side would be our daily, would be the swing low down here on the 4-hour time frame. So just going to update that. The most recent, the next draw on buy side just before the open, I remember, was the imbalance that still remains quite wide on the 4-hour. So rather than just saying, rather than labeling the daily, for example, what I did was I adjusted the level of the daily box, right? And then I just made it daily and 4-hour buy side targets. And then going into the 1-hour time frame, just going to forward play this one more time. Right, so the next draw on buy side was very clearly the swing high that was created right here. The next draw on sell side just before the open of the European session was this imbalance that was created down here. So that's what I highlighted in the morning. So it's H1 sell side target. Right, now those levels are updated. So I just wanted to just refresh your memory on a few things I mentioned in the morning of Thursday, the 9th of March. So the first thing I mentioned was that, of course, a bullish reversal was imminent on the daily, but there were other confirmations on the lower time frame that also indicated a potential bullish reversal. So on the 4-hour time frame, one such confirmation was the fact that price had given us that initial expansion and contracted, taking out the recent low, and it was sort of in the process of taking out the recent high. So in cases like this, especially when price is bullish and it takes out a recent high, pulls away, we can anticipate the next candle to potentially be a breakthrough candle. Now, if we take a look at the 1-hour time frame as well, just before the open of the session, again, we can see, so I'm just going to use this box to highlight where the initial expansion was, because there was a lot of accumulatory activity that took place on Wednesday, right? So we can see that price obviously gave the initial low, delivered the lower low, broke market structure right there, right? So there's a break of structure that created a breakout. The market came down not only to retest the breakout, but also retested the most recent low. So if we were to take a look at the initial, where the initial swing high was created, if we draw a box around that and expand it, we can see the range that price was accumulating within the first expansion. So this is the beginning of price creating that second expansive move to the upside just before the European Open. And that was another strong indication that a bullish continuation was imminent, because we were sort of so going into the European Open, price was beginning to give that second expansive phase. So if we were to go now into the 15 minutes time frame, we can see that the Asian range was created from this initial high to this initial low, back to this initial high, and then back to take out the most recent low. And price was obviously ranging for quite a bit just before the European Open. So again, just remember the general rule. If you have an accumulatory Asia session, we can usually anticipate an accumulation, manipulation, distribution model to take place. So manipulation in London and potential distribution in New York. So we can see that price, obviously, before the European Open has already broken outside of our Asian range. However, we have a break because price left a bearish order block, a bullish order block. So just going to label this as such. Okay. So what can we see now? What I'm now waiting for is to see what price does just before the open of the session. Well, just before the open of the session, price trades into the bullish order block. Now, this is a very, very strong sign of a potential bullish continuation to the upside. Okay, so what I'm now looking to do is to look to go long within the bullish order block. So even if price takes out the short-term low there, even better. But I'm looking to go long within this area with my first initial profit target being the H1 buy side target, and my second target being the weekly sell side target. But I remember, because the distance from the 1-hour buy side to the weekly sell side was quite a wide distance, what I was also looking for, what I also looked for on this day, was some sort of an intermediate high or an intermediate low just before the, sorry, not low, just an intermediate high just before the weekly sell side. Now, I could see that on the 1-hour time frame, there wasn't any. There was simply this imbalance right there. But that imbalance on the 15 minutes was a short-term high, right? I think it was a short-term high right there. But I can also see that there was another short-term high where the weekly sell side target was. So even though it was a wide distance, because we were within that bullish reversal cycle, and there wasn't really any strong area of buy side pull within this range, right? Because there wasn't any 1 hour or 4 hour high, because those are the higher time frame pulls are always the strongest ones. I was fairly confident that we could see a move to the weekly sell side. So the first target was H1 buy side, with the second target being the weekly sell side. Okay. So going on to the 1 minute time frame, again, just before the open of the session. Now I'm just waiting to see what price does. So we can see price obviously delivers me that lower low, which is what I always look for at the open of the session. Now, from this point onwards, it's pretty straightforward. All I'm interested in is a break of market structure. So we can see that price creates an intermediate high, breaks above that intermediate high, leaving an imbalance right there. So this was my entry confirmation to go long. So it's a break of market structure. Okay. So now that I have a break of market structure on the 1 minute time frame, the next thing I'm interested in is to see if I have a setup, because having an entry confirmation does not always mean that you have a setup. Okay. So what defines a setup for me? So one of my core criteria for a setup is that I need to be able to at least achieve a 1-to-2 risk to reward ratio to the most reasonable target. And in this case, the most reasonable target is the 1 hour buy side target. So I always evaluate first before I enter. I say, what kind of risk to reward can I get? So entry at the imbalance, stop loss going below the 5 pips below the recent low. And I position my first profit target at the 1 hour buy side target. Now, in this case, I didn't have a 1-to-2, right? I didn't have a 1-to-2 to the recent high. So if I were to engage, and I did engage in this, I'm just going to explain my thought process to you. If I was going to engage in this setup, I needed to identify other confluences around the recent high where price could interact with. And for me, there's only a very limited list of confluences that I look for. One such confluence is the 800 EMA. So I always look, okay, is the 800 EMA within proximity of the recent high on either the 5 minutes time frame or the 15 minutes time frame? If it is, and I'm very confident on the direction of this setup, then rather than aiming for the recent high, if the 800 EMA is, let's say, a few pips above the recent high, and I could get a 1-to-2, then I'll take it. So that's what I did, because I believe the recent high was around a 1-to, remember this on the day, was around a 1-to-2.1, just above on the 15 minutes above the recent high. That's where the 800 EMA was. So rather than taking profit at the recent high, which again, I understand the risk involved in this kind of scenarios, right? But again, it comes down to just number one, understanding and having confidence in your analysis and using multiple confluences to make decisions. Okay. So I placed my first profit target at the 800 EMA rather than the recent high. And then I placed my second profit target at the weekly sell side target, which again, there was confluence because this was around where I believe the 1 hour or the 15 minutes 800 EMA was positioned, right? So this is the setup that I took. Now, after obviously making sure that it was a reasonable setup, I made sure I went in at the appropriate risk, which is 0.25%, right? And then after that, I just let the trade run. So price eventually did trade into the 800 EMA. As you can see, there's a very strong rejection. After price hit the 800 EMA, it came back down. And then that was my first profit target done. So at this point, I know that I've made some money in the trade. So I'm very confident to let the rest of the position run for as long as it needs to up until the end of the trading day. Just before obviously going into the New York Open, price had already traded above the London high. And going into just around the end of the New York morning, so this happened quite late in the day actually, price had delivered on the second target, which was the weekly sell side target. So this is an area of resistance that now became an area of support, okay? So this is one of the few scenarios that I would use support and resistance, right? But again, it's within a very specific context. So that was the setup that took place on Thursday. Now going into Friday. So going into Friday, now Friday was a pretty nice day. We can see that price had already filled most of the imbalance into the weekly sell side on Thursday. So I'm just going to adjust that as the new daily buy side target. And then of course, the next draw on sell side liquidity, or the new draw on sell side liquidity, is now going to be that swing low for the daily, right? So that also has been updated. Control Z. So we're just going to remove this. And I'm just going to move this right there because we now have a new swing low right there. Right, going to the 1 hour time frame. No, sorry, I do apologize. Going to the 4 hour time frame. I'm just going to forward play this to 1 a.m. All right, so H4 buy side is going to be the swing arrow right here. And then H4 sell side is going to be the imbalance down here. Right, going onto the 1 hour time frame. So just going to forward play this one more time. The H1 buy side target, the 1 hour buy side target is the swing high right here. And then the 1 hour sell side target is going to be the swing low down here. Okay. I'm going to update my levels, ensure that any clutter has been eliminated. It's important to keep your chart as clean as possible. Intermediate low gone. I don't need you anymore. I don't need you anymore. All right. So going to the 15 minutes now. So now just this is the pre-EU open levels that I identified, with this being the high and this being the low of the range. Just going to remove this. Now, Friday was another day because obviously we've now seen that initial session of rise. We still have a bit of imbalance open. At the same time, we could get a second session of rise because we are now within a bullish reversal phase of our bearish cycle. I remember within a bullish reversal phase, we could get anywhere from 1 to 3 sessions of price reversing. So at this point, I was pretty open-minded to a potential bearish continuation, but I was also open-minded to a potential bullish continuation as well, to a bearish reversal, but I was also open-minded to a bullish continuation within the current cycle. Now, another factor that I considered was two things. Number one, where is the 1 hour? What is the 1 hour time frame cycle? We've seen the initial expansion right there that I identified before. We've seen a second expansion that took place on Thursday. So at this point, I'm pretty much anticipating some sort of a third expansion because price has already created a swing eye right there. If we take a look on the 1 hour time frame, we can see that price obviously delivered this initial expansion, contracted, secondary expansion, contracted, and we've seen that third expansion right there, the market contracted, and now I'm seeing the beginning of a new cycle. So we have number one, number two, contraction, and now I'm anticipating another bullish expansion to the upside. So the 15 minutes time frame is, and the 1 hour and the 4 hours give me an indication of a potential bullish continuation. Now, going into the European Open, I can see that price is now traded outside of my Asian range, but I'm now interested to see where price is just before the London Open. I can see that price is now giving me a break scenario. So within a break scenario, area of interest is going to be, that's right, the bullish order block. So we can see the price is traded outside of our bullish order block. So I'm anticipating one of two things, to either go short from the bullish order block, right? Or if price was, for example, break below the order block and give me a massive break of structure to the downside, then I'll be looking for some sort of a bearish continuation. Or if price was to give a 5-minute break of structure whilst trading into the order block and it was a clean break of structure, then I'll be looking for a sort of a retest. So what I'm interested to see now is, what does price do going into the open? Because bullish is the best direction to trade in, but I'm also open-minded to potentially go long as well. Now, I can see that obviously price delivered a recent high just before the open of London. And I can see that, okay, this is what you could classify as a 5 minutes break of market structure, right? So price gives what could be a 5 minutes break of market structure, but what does it do? So that there's now a very big giveaway of a potential continuation, is an unmitigated zone, right? So although price broke and gave a break of market structure, did it trade to retest the breakout before continuing? No, it didn't. It left this area unmitigated. Therefore, when an area is unmitigated, you can anticipate price to come back into that area in the future. Price might simply be seeking more sell side liquidity because the true move is usually to the upside. So unmitigated zone usually gives an indication of what the real market move could be in the near future. So in this scenario, what I was now looking for was, during the London Open, I was now looking for a 1 minute break of market structure to the upside, right? And this is something that I highlighted on the day, because price traded into the order block, immediately broke above the order. So trading into the order block immediately inflected, giving me a classical break of market structure right there. Right? So this is in line with the dominant bias on the daily, on the 1 hour, and also on the 4 hour, right? You always want to trade in line with your higher time frame bias as much as possible, right? So I have now a break of market structure to the upside. So in this case, I'm anticipating a break retest continuation scenario. I have a recent high right there. So now I want to evaluate to see if I can get a 1 to 2 to the recent high, if I can get some sort of a good setup in this scenario. So I set my positions. My long, because this is a breaker market structure with a breaker retest, right? So obviously I'm going to anticipate price to retest least 50% of our breaker, right? So my entry position was at that 50% points, that midpoint. Stop going below the low. And of course, first target is the recent high. And my second target was the 4 hour buy side target. So it's a sell side, but this should have been, I don't know why. Wait 1 second. Let me just double check something quickly. 4 hour. Is it a mislabeling? I think I mislabeled because the buy side target was here, sell side target was here. So just going to get rid of that, right? The second target was the high of the daily imbalance right there. Right. And again, another confluence I used was the 800 EMA, because I believe this was around where the 800 EMA was on the 1 hour time frame. Okay. So that was the setup that I traded. There's a clear long confirmation. The first target being the recent high, the second target being the high of the daily imbalance, just in case price wants to fill the imbalance on the third day after opening and creating that imbalance. So we can see that price came down, retested entry, gave us that entry, gave us that trigger from the entry level, and then proceeded to shift to the first target, which is the recent high. So price did accumulate for a bit, and I know that some of you guys were also looking at this as a potential short, but again, just to reiterate, the reason I didn't go short on the 5 minutes in this case was because this was unmitigated zone that was created in the London Open. Price did break structure in the 5 minutes, didn't immediately trigger the breaker, leaving an unmitigated area, and that is usually a clear giveaway that price might be looking to move in that direction in the near future. So therefore, the most reasonable position to take in this case was a long, in line with the 1 hour bullish cycle, the 4 hour bullish cycle, as well as the daily bullish cycle. Okay, so price delivered on the first profit target just before the European Open, and also hit the second target just before the European Open as well. So it was a very, very quick move that took place on Friday. So that's it, guys. So that's all the setup that delivered between Monday to Friday last week. So on Monday, there was no setup at all. But on Tuesday, Wednesday, Thursday, and Friday, we did have a setup in the London session on each and every single one of those days. So I will be posting the flashcards for these setups as well in the Discord channel. But I hope this helps, and I wish you all a great week ahead.